Yeah, so it's definitely, we call it like an on-ramp into, the angel investing community and seeing if it's the right fit for you. And one of the barriers was education. So it's like, maybe they've been successful in their own ventures, but they don't know how to look at a technology startup. And then additionally, it was just finding a community of people where they can learn together, where, instead of coming in and feel like I'm the expert in the room to like go write this first check, let me learn with a set of peers that are also interested in learning. And so
yes, this is the Mark Haney Show on a mission to ignite the entrepreneurial revolution right here in the hometown we love. We do that by building the Backyard Advantage, the most connected community in the world for local entrepreneurs. And today on the show, I'm really happy to have people that are really the heart of the Backyard Advantage here with me. Joining me today, I have Monique Brown. She is now the Knowledge Community Director at Wexford Science and Technology, but she is also the chairman of the board of the Growth Factory nonprofit, and she is one of the founders of the Growth Factory, my business partner. So welcome, Monique, and she has brought along with her a guy that you probably know if you've listened to the show much. His name is Cameron Law. He's the executive director at the Carlson Center for Innovation and Entrepreneurship. Among other things, you do other things other than that. I know both of you do. But we wanted to talk today around angel investing, and specifically AngelCon, which is an event or a series of events that you all put on, that my understanding is the primary reason is to get some of that capital off the sidelines and to begin discovery of the asset class of venture capital. And one of the ways you do that is, those baby steps into angel investing. Is that a fair, Monique, is that a fair statement as to what the purpose is?
Yeah, no, absolutely. Well said. So I think really answering your call, I think from a couple of years ago when we were looking at founding the Growth Factory and thinking about the problems that we were really solving or the challenges we were addressing in the market, two-sided coin, right? It was wrapping our arms around and building a backyard advantage for our founders. But the flip side of that coin is the capital stack in the region and building that capital stack. And that really meant that we did have to get more capital off the sidelines. And, Cameron and I had been talking about that as well. And, came across this program and really, Cameron, I'll pass it to you, took the lead, Cameron did, and just saying, let's do this.
Okay, Cameron, yeah, what happened?
Yeah, so there was an opportunity we saw. We're not the originators of the AngelCon program, so we actually, looked around the nation and saw where were areas that they were really successful in activating early stage capital, especially in emerging markets, right? We think of Sacramento, we're not quite the Bay Area, but that's not necessarily maybe even our intention. So how do we get the capital off the sideline? And so we saw a program called AngelCon that was run in San Diego as well as in Cal Poly. And really with this ethos of how do we find a way to educate people about the asset class, but help them write their first check into a startup in the process. And so the way the program works, it's a small commitment of $5,000 is really their commitment to the program. We've been able to get the program in terms of the support funded through a grant. It's actually a state grant through an Accelerate California program. So we're actually one of 13 hubs around the state to activate support around founders. And so we decided to launch this NorCal Angel program. And one of the core ethoses is through a series of education. So they actually learn about where does angel investing fit in their financial portfolio? How do they start to look at companies? So they, have an education side, but they actually get to put that work into practice by setting a series of companies that go through their desk and then making one final investment at the end of the program. So they pool those funds through an SPV and make one large investment, and we've run 2 of them to date.
Okay, so I want to get deeper into how we do that and what's available now, what the future looks like. But I want to dive back into something that you kind of brought up, Monique, kind of like the why behind it. As I look at Sacramento, and we've all lived here a long time, we are not as developed in terms of the venture capital industry as somewhere like the Silicon Valley, New York, Boston, a lot of areas. And so for that reason, our startups, maybe they have a little bit more difficulty getting that really early seed stage capital just because people don't know, they don't know about it. They don't even know how it works. But yet we have high net worth individuals and family offices that are heavily invested into other asset classes like stocks and bonds and real estate and other things, and just less of their capital flows to things like early stage companies. And have you seen, so Monique, both of you have been in the trenches on this over the last several years, building out this ecosystem. And you mentioned it's sort of two-sided, but do you have any sense as to how that is changing? Like, are we better than we were 5 or 10 years ago when you were getting into venture capital? Are we, where are we going with this?
I think it's a really important question, and I'll answer it in two ways. So I think that are we better off than 10 years ago? I think the answer to that is yes. I think we have more and different individuals that are expressing interest, that are showing up and diving in, and especially super engaged individuals. Someone that comes to mind, Zach Hansen, who just 2 feet jumped in and has really gotten involved now, as you know, in lots of different aspects of the ecosystem. I wish we had 1,000 Zach Hansens. Yeah. I really do. But I would say that I still feel like we're at the bottom of the mountain and the rock is heavy. Like, I still feel like we're climbing up that hill and the engine hasn't fully kicked in yet. So I think we're better off. I think we're trending in the right direction. I think programs like this are exactly what the region needs. And I think you have, through this program, the opportunity to meet people like Zach and Alec and Ian and a number of others who've plugged in and are really, really valuable to this community and are getting engaged in meaningful ways.
So let's think about, why is investing into startups good for society? Why is it good for Sacramento? Why is it good for the investor, which is probably the main thing? We all are motivated by our own success, I guess. And if we're going to invest into something, we want to have success with that. So why is it important? What does it do to have a robust ecosystem in terms of venture capital and angel investing in a town like Sacramento? Why is that important?
Yeah, I think just in general, entrepreneurship's key no matter what town you're in. Obviously, Sacramento, we're known oftentimes as a government town. And so when you're looking at it from a purely job creation, entrepreneurs are proven engines for creating jobs and opportunity. And so some of the work that I've actually done in addition to the Carlson Center through this group called Right to Start, really eliminating barriers for entrepreneurs and getting started. And one of those is often access to capital. And so in a more resource constrained area such as Sacramento, getting that capital off the sideline to support them and growing is vital. And part of the reason is because new businesses and young businesses are proven to create net new jobs. So often when you think about economic development, there's 3 kind of pillars. So we have business attraction. So how do we land a big company and bring them into our community? They'll bring those jobs alongside them. 2 is, how do we grow companies that are already existing here? So think of your middle-sized businesses. How do we help them scale? But what often is missed out of the pillar of economic development is, how do we support new companies in getting started and growing? And that's actually been a proven net job creator and is a proven way to actually help people get out of poverty and continue to grow. And so when we think about this work of accessing capital and supporting entrepreneurs, it's not only bettering those individuals, but it's bettering our communities through the jobs they're creating and the empowerment that comes with it.
And to kind of piggyback on that, success breeds success. So if you have a successful person coming out of Sac State, UC Davis, maybe they're launching something out of Intel, maybe it's some kind of spinoff. If they feel like they have to move away from Sacramento to get capital, they got to move to Silicon Valley or the Bay Area or elsewhere just so they can have a fighting chance for raising money, then we lose that successful, talented individual or group of people that are going to do this. And so they're going to breed that success in the Bay Area. Hence, that's what's happened over time. We've seen a lot of companies that didn't realize over the years that they could build a great business in Sacramento because of restraint on access to capital. But now I see it starting to change a little bit, and people are now saying, I want to build it near my mom and dad, near my friends and family, near my peer group from my old job, so that there's an advantage to building it at home if you can get the capital.
Totally. And I'll add one thing. I think obviously you have the connection to family and building here, but like from an ecosystem standpoint, we also have really amazing assets to foster companies that are building in certain industries. So think of, the agri-food tech world, all the technology that's coming out of UC Davis. We have great partners at AgStart. We're known to be a strong ecosystem there. The health and life sciences, obviously UC Davis spins a lot of companies and innovations out of there, and a strong asset. I'll let pass it over to Monique on the Connect Labs in Aggie Square. Amazing asset for supporting entrepreneurs that are building in those spaces. And so it's not just purely the capital that's starting to get off the sideline, but we have the human capital to start supporting these companies as well, which I think is often missed on some of these other opportunities.
Yeah, maybe you could touch on that too before we get into the nuts and bolts of AngelCon deeper. But besides the capital, what else is here that maybe people don't know about? You're in the heart of Aggie Square, and a lot of things coming out of UC Davis, along with the Growth Factory and Carlson Center. You're at the heart of all of it. So what other, resources that people might not realize are here?
Yeah, I'll answer that, but I want to add one thing to what you were saying about talent, and the advantage of keeping talent in the region. I think that the other piece to that also is that kind of culture of innovation that I think is necessary for the world that we are living in now and moving forward. And I don't think we can afford not to invest in the companies and people that are building companies that are defining our future. So I think to compete as a region, we have to rethink how we are approaching innovation and entrepreneurship very seriously. And I think that culture change is critical, honestly, for the future of this country and the future of our community within this country. So,
well, as a byproduct of that, you brought up jobs. The workforce is changing dramatically. The white collar jobs. My last guest, we talked about the white collar job situation, and the trades are doing well, which is nice. There's a lot of upside possibilities on what's going on with the blue collar side of things, but in reality, a lot of these white collar careers could be part of startups. Yeah. I have to imagine that those are great opportunities to go out and do something that's really, really cutting edge as sort of a white collar type person rather than somebody out there swinging the hammer.
Yeah, I think there's a couple different things in there. So then now going back to the infrastructure and resources in the region and what else is here and why now is tied to, in addition to agri-food tech and a lot of that maybe biomanufacturing, which could link to traditionally blue collar jobs, right? We also have science-backed ventures, right? That are not your typical white collar enterprise SaaS office job, but they are kind of intellectual property driven companies that are really changing healthcare, that are changing, compute, energy, all these kinds of things. And we do have a global leading university here that has a lot of potential to develop companies that if we get kind of our acts together, which we're working on, we can, instead of allowing those to leak to the Bay Area, we can keep them here. So we do have infrastructure like Aggie Square, which can capture them. But we also have, I think, growing cross-regional partnerships. And you see that a lot with the work that GSEC has been leading around the semiconductor kind of industry and the Highway 50 corridor in Rancho Cordova, and, some of the workforce development that Sierra has been doing with Bosch and everything like that. And so I think what you have is the backyard advantage in action, really. What we have in this region that is a strength, and I think we're continuing to build on, is how do we work across sector and across institution and across roles. And, the fact that we both wear so many hats and try and put the pieces together. We're not the only ones doing that, right? There's a lot of us that are trying to think about how do we build together. And I think that backyard advantage messaging still is so resonant.
Yeah, I love the way Dale Carlson he's the person that he made a big investment into Sac State and brought the Carlson Center together. He's been one of the maybe most philanthropic people in the region, believes in entrepreneurship because of his success. But it feels like, to me, that a number of the people that are sort of leading these disparate entities and efforts, they all have a attitude of let's help each other. We're not competition. We're not trying to specifically silo ourselves away from other people to try to beat the guy across town. It's more like, how do we help each other? Rising tide raises all ships type of attitude.
Yeah, so one of the things that comes to mind, like a very tangible example of that, was actually when the Greater Sacramento Economic Council went to kind of do this rebranding effort. We brought some of our ecosystem builders together, and one of the common words that stood out was collaboration, what sets us apart from other ecosystems. And you see that in there, like do more, be Greater Sacramento, right? Like that's all about us coming together and that we can be more collective and actually push that going forward. And so that work is actually taking place, and it's not just something that, as a value statement, it's something that ultimately comes and is earned by us working together and actually doing the work.
Do more, be greater, Sacramento. Who came up with that? Who was the?
I'm not sure.
Who was the marketing genius behind that one?
I don't know. You'll have to ask Barry on that one.
Okay.
So.
When I heard it, I know they love it, so I love it because I want them to win. I want us to win. They're a part of us winning. So hopefully it sticks. Yeah. I like the backyard advantage.
There we go.
But, that's me. But I'm not competing.
Yeah.
So how does AngelCon work? You started to, I derailed the conversation a little bit, but so it's like, why be an angel investor? What's in it for Sacramento? What's in it for you? Obviously, it's a riskier asset class when you invest into a startup, so it would be high risk. But it's a way to break in, I'll say gently, with a $5,000 check versus a $25,000 check or $50,000 check, or maybe a commitment to a fund of $250,000. It's sort of a kind of a dip your toe in the water kind of a thing. Yeah, it feels like.
Yeah. So it's definitely, we call it like an on-ramp into, the angel investing community and seeing if it's the right fit for you. And, one of the things we like kind of our thesis around it was one of the barriers was education. So it's like, maybe they've been successful in their own ventures, but they don't know how to look at a technology startup because maybe they were successful in a more lifestyle business or something of that sort. And so looking at technology, innovation-driven startups is a little bit different. And then also maybe where this fits in their overall kind of financial, planning and all of those things. So those were some of the gaps that we were identifying. And then additionally, it was just finding a community of people where they can learn together, where instead of coming in and saying, hey, I have to feel like I'm the expert in the room to like go write this first check, let me learn with a set of peers that are also interested in learning. And so kind of how it works, and then I'll pass it to Monique, it's a $5,000 commitment, so that's the minimum. That equals what we call 1 unit or 1 vote, and so our goal for each AngelCon is to rally around 20 angel investors, so targeting $100K investment. And so we're then able, once we get the commitment from angels, to position that to our startup ecosystem, saying, hey, we have a whole fresh set of angels that are interested in deploying capital into a scalable technology startup just like yourself, and we get a series of applications, and they learn by actually going and doing. So they go through all the applications, they whittle down to a set of semi-finalists, then they identify from a pitch day a set of 4 finalists that they want to choose, and then they do 1 final investment. And throughout that whole time, we're bringing in speakers to talk about where does this fit into your overall financial plan? How do you do things such as due diligence, understanding cap tables, term sheets? There's a lot of different content that we bring in, and it's again bringing in speakers from the region to build that connection. So it's not just purely the content, it's they get to sit down with Dale and talk about how he looks at angel investing and see how you can build those types of connections. So I'd love to see if
so you pool the money though. Let's
correct.
say 20 people throw in $5,000. It ends up being a nice chunk of money to make an angel investment, or maybe even a few. With that $100,000, does that make, do you invest that into one company?
One company.
You pick one company, and the participants, the people who throw in $5,000 and get a share or a vote, they get 1 vote for picking whatever company they want who come through, and they get to choose from how many?
We've had our first rounds. We've had over 80 applications. So they whittle that down to about 20 semifinalists. And so those 20 actually go through a series of training. So the Growth Factory nonprofit runs that investment readiness series. And then they come in, all 20 of those semifinalists will pitch to the angels. The aim is to select 4 finalists that they then dive into deeper due diligence. So, doing all of the fun work that entails. And then there's a final pitch event where they select one of those companies to make that larger $100,000 investment or whatever capital is fully rallied.
Okay, maybe I'll let you add on to that, Monique.
Yeah, I think the headlines are $5,000 is very approachable for a lot of the high net worth individuals that we're working with compared to, as you said, those larger investments, and that there is no cost for the program to them. So that is 100% equity investment. So I think that it's hard to find that opportunity anywhere else, right? And what we've heard back from those that have participated in the past is it was that $5,000 was well worth it just to get exposure to what is in the ecosystem, those 85 applications or whatever they're going through, that how quickly you understand like what's out there and how do I evaluate, like just by doing that was huge. And then the network development that they get, both from like meeting the founders, meeting the speakers, and meeting each other, they found tremendous value. So even without the equity investment at the end, they're like the $5,000 was worth it.
Right,
so
it was $5,000
like
for the value.
Done,
other
right?
than even if the company goes out of business.
Exactly. So that's one thing that I'd like to emphasize. And then the second thing is the flip side of this. So we're talking obviously about angel investing in the capital piece, but there is also tremendous value on the startup side with the investment readiness programming that is run by the Growth Factory nonprofit. And again, we've heard from the teams on that side that they learned so much going through the diligence process with our angels. And I found that curious initially because some of these founders are not, this isn't their first fundraise and they've been through the diligence process before, but I think that they really appreciated the kind of honest and curious dialogue that our angels brought to the table. It didn't feel like a Shark Tank kind of we're here to get you. It was kind of a collaborative, like, hey, we're learning and we're curious and we want to help, right? And so kind of the culture of those conversations was maybe different, but what they ended up taking away was like, oh, I should be thinking about these things. They were able to take a lot away. And so we've heard from a number of our companies that was actually the best diligence process that they've gone through. So value on both sides of the coin. But I think that, and the third thing I'll say is a number of our angels have gone on to join the SAC Angels, to join the Growth Factory Ventures as an LP. We're now working closely with UC Davis's Food and Health Angels on our Deep Tech edition to see if some of our angels for this round might want to filter into that. And so when we think about the capital in the region, I think before there was no front door. It was like you're in a room, you're like, where do I go? I don't know where to go, right? And now we have a front door. You can walk through it. It's very friendly, low barrier to entry, low risk. You get to test out, meet a lot of people. And then once you get through that front door, there's lots of different options for you to continue on with the work if you are so inclined.
So 2 questions here to follow up on some things you said. Zach Hansen, he was on the show, I don't know, a couple weeks back. I don't know if that's aired yet, but he and his wife, Lisa, built a company called Growing Brilliant, sold the company, had a nice exit, and so a number of years ago, but he hadn't really broken into venture capital. He comes through AngelCon. I ran into him at AngelCon because I was a participant on the last day of I think the first AngelCon, and we reconnected at that time. And ultimately, I think he's the perfect example because he did invest into the AngelCon, but he also came on board as a partner in the Growth Factory, which is, I mean, to me, that's perfect. That's an ideal example. But from your perspective, I didn't go through all the different training through those set of classes, but why was he, I guess, an ideal? You wish you had 1,000 Zach Hansens. I do too, from the Growth Factory Ventures perspective. We need more investment into our fund. But why was he so good for AngelCon?
Yeah, I think he's a good example of really a lot of the cohort members that we've had engaged. Number one, right? Like he shows up, right? Yeah. Two, he's curious. And so I think that's the other thing that I love about the groups that come to the table. Nobody in the room needs to be the smartest guy or gal in the room, right? Which, you know, can be off-putting. Everybody comes with like a learner mindset, like, hey, we're curious, we want to know, we're bringing our life experience, we're bringing, you know, other things that we've done into the room, but we're all also learning together. And so I think I really appreciate that about him. I think it's really additive. Three is that he was our diligence lead twice, I think, and both of those times are the companies that were like, this was great. I think
he asked a lot of questions. He wanted all the data. And in doing that, he made the founders better, right? And so, I mean, he was just hitting on a lot of and he's a smart business guy. Yeah. Obviously, built and sold businesses, and so that's probably the kind of person you want asking the tough questions. Yeah.
But and then obviously, like what happened after Sac Angels, he joined Growth Factory, and like so, like I said, you know, and we have other members that have gone through that are like Zach. He just gets to be our poster child for today.
That's great. Okay, so you front door. You come through the front door. So what happens? Are you going to have? So you've done two. I'll go back. Let's go with the first one. It's the one that I believe the winner was Arise.
Yes.
I remember there was a vote at the end because I was in here at the end. We did it up here in my office, and the vote wasn't unanimous. I'm not going to give any specifics to keep everybody's vote confidential, but it wasn't unanimous. And so, how, in your opinion, is that the democratic way of doing it? Yeah. So you have, let's say there's 4 votes, 15 votes for, 5 votes against. The 15 votes outweigh the 5. It's a 1-to-1 vote.
That's how it goes.
And if you're one of the losers, you agree at the beginning, you're just going to go along with whatever it is, exactly, even if you think that's a bad investment.
That's exactly right. So that is part of the commitment to the program is this is a democracy. You can weight the democracy in the beginning. Like you can buy more votes.
You can buy more votes. That's what we do. Throw an extra $100,000.
In the beginning. But you can't do that once we've got, once we're in the voting room, you can't all of a sudden decide to buy more votes. So if you want to have an outsized impact in the beginning, you can buy more voting blocks. Yeah. But at the end of the day, I mean, it's like even, venture teams, right? Like you have your deal advocates, they come to the table, the partners look at it. Sometimes it's not unanimous, but at the end of the day, if the majority of people feel like this is a good direction to go, so goes it in this instance. Now, I think the other things to highlight are investors, our angels, are not precluded from making investments into other companies. So, and that has happened as well, right? And so they meet other companies through the whole process, and they are if the companies are open to it, they are able to invest in other companies, right? So you're not precluded from that. And the other thing I'll say is we did in that case have a couple of our angels that got so excited about the investment that after he was Arise was selected as the investment, they actually added capital after the fact, which Arise welcomed. So there's some flexibility there, but yeah.
I think I got invested in her Arise. Like I'm a Sac Angel.
Yeah,
invested through that.
I think you got a Moneta.
Growth Factory, Moneta, the few funds I'm invested into. Growth Factory's invested into. So yeah, they better win. They better succeed.
Yeah. All right, Brad. Pressure's on.
That's awesome. He's coming on the show too, and I decided I'm going to get some different AngelCon people on the show. Yeah. So I asked Zach and Brad to come on the show. So walk me through that experience. So the first one, you're just getting it off the ground, and you did a lot of it here in our Rockland office. The last one, I believe, in Televasc won, and it was at Aggie Square, and it was a bigger event. I remember going, wow, it came a long way since the one in Rockland. So talk to me about the progression, and then maybe where the next one's going.
Yeah, so I'll maybe take the progression and then would love for you to tackle the deep tech, which is our newest edition that's coming on right now. But yeah, so I think we definitely grew the program both from, the way people engaged as angels and the process of bringing in speakers and all the content there, but then additionally just the growth of the Pinnacle event. So that takes place during Global Entrepreneurship Week each year. So that'll be one of our anchor events. So hold November 18th this coming year. So that'll be our big pinnacle for AngelCon. But I think part of it was just we've gotten more visibility about the activation of that investment. So it's not only that we deployed the investment into Arise in that year one, but it was that we actually now had a whole set of ambassadors, those angels like Zach, like Ian, a number of people that went out there and continued to share the word of the program and the impact that that's had. But additionally, it was them joining these other investment groups that were speaking to why this ultimately matters for the region. And then there's also just not many events where people can come and see, $100 grand being deployed into a company in one particular event. Right. And so that kind of public celebration of entrepreneurship is certainly a key component.
That was nice. Yeah, I went in there. I had somewhere to be before the climactic vote at the end, but Intellivask is also a Growth Factory Ventures portfolio company. So I was happy that they won, but it ended up being another medical related company. So Arise is a cure for cancer. Yep. And then Intellivask is some other medical device, a medical device of sorts. And so I'm wondering, are you guys going to get, and now your deep tech, is that geared toward medical and life science too?
Yeah, let's talk about that.
You guys are going to get known as basically the medical stuff. What's going on with the software companies and stuff? Somebody who's building a widget of some kind.
It is funny, and I love telling this story because that first cohort, those angels were like, we want revenue-generating companies. Enterprise SaaS was really like, they were straight down the middle, right?
Doesn't it seem a little safer?
And Brad was like, I don't think I should apply. And Cameron's like, no, you should apply. And then he did get selected as one of the final 4 teams. And Zach was his diligence lead. And Zach was like, hey, what do you think? Should we really go through this? It's like, we said revenue generating and this isn't the thing. And I said, no, you guys picked him as one of the 4. You should go through the process. And then lo and behold, right? And I think what that speaks to also, and I think it's really, really positive thing, is, when you get in a room and you start talking about where do we want to put our money, and you look at the opportunity to change the trajectory of cancer care, and you have a founder like Brad who is so hardworking and so just really intentional about the science that he is, moving forward in the company that he's building. How good is that going to feel if that company hits, right? There's a huge financial potential upside to that, but B, just from an impact side. And it was really fun to watch everybody kind of go through that process and end where they ended. It was not at all expected by anybody.
Did it feel like they invested with their heart more than their wallet at some level?
No.
Okay.
I think it's interesting. I think it was balanced because I think they also looked at this as higher risk, but the opportunity, if it hits, is a much higher reward opportunity financially as well.
Okay.
And then lo and behold, year 2, the last 4 companies were all 4 of them.
3 of the 4.
3 out of the 4. Oh, no, because we had Shweta with Strived.
Oh, yeah.
3 out of the 4 were and they, again, 80 applications, all sectors. We did not limit applications by sector. So 80 applications, all sectors, and 3 out of the 4
Interesting.
finalists
So Strived is focused on education, AI within the education space. And then you had Matrubials. Were they one of the ones that
Matrubials. We had Xeronetic, which is like this AR surgery kind of application. And then Intellivask, which is remote monitoring for vascular occlusion. Yeah.
Okay. So now the new one, you're calling it deep tech. How deep is that tech?
Well, we'll see. We're working on it. But no, this came about. SBA runs a national growth accelerator fund competition every year, and in February of last year, I said, hey, what do you think if we submit a deep tech version of AngelCon to that? And it's really about capital formation, really focused on emerging markets. And when we look at like the assets in this region, and you think about like UC Davis has long been touted as one of the region's assets, $1 billion a year research university, but heretofore without, pre-Aggie Square and, almost all of that, kind of human capital, IP, venture capital left the region. Like it skewed toward the Bay Area coming out of UC Davis, right? And they all say they have about maybe 300 companies in the last 10 years that have spun out. And there's a small fraction of those that have landed here. So the premise behind AngelCon Deep Tech was like, what if we could build a way to keep them here? Starting with early stage capital, paired with the kind of coming online of Aggie Square. Now we have some infrastructure, we get a little capital, and we start to build a mentor network. How much of that could we, over the years, how much of that could we begin to keep here? And so we put in an application to the SBA for partners, so Carlson Center, Growth Factory, UC Davis Student Startup Center, and Connect Labs. And lo and behold, we won.
Wow.
So one of 3 in California. I think they award like 20 or 30 out of hundreds of applications nationwide, and we were awarded some funding to go ahead and
is that funding designed to make investment into the startup, or is it to help run the program?
It's to help run the program.
Oh, wow.
So it builds capacity essentially in our region to stand up programs like this.
Wow.
And then the funding will come from the angels, and then Cameron has also some non-dilutive funding that we're able to deploy into some of the companies alongside the angel investment as well. And so deep tech, in this case, we just really aligned it with the sectors that the region is leaning into, much of that led by GSEC and Valley Vision and others who are crafting the regional strategy. But agri-food tech, health and life science, clean energy, zero emission vehicle, and battery technologies. So
okay, so you have a sectors built out within a deep tech.
Yep.
Okay.
Yeah.
And have you started? I think I agree. I don't think I agree. I agree. For anybody listening here, I invested into the first 2, and I'm going to do this third one. So I'm a part of this if anybody's curious. So I checked, I'll be there. I'll be around on the 18th, it looks like, barring any unforeseen plans my wife makes for me. I'll be there. And do you expect this one to be bigger than the last one? Smaller,
No.
same?
I think, I think it's interesting. Again, we're learning. I think that the deep tech piece for both the founders and the angels is a little like, I don't know, that sounds really hard. And so I think we're having to walk through it. And what is interesting is, again, to your point, the first 2 AngelCons where there wasn't that like gate, the investments ended up being in companies that would qualify for this, right? And so in reality, we're already doing the work, right? We're already investing, but deep tech is, it's a confusing thing for a lot of people. So I think we're working through it. One of the opportunities is UC Davis is working to stand up something called the Food and Health Angels. There is a lot of talent inside that university, and there's so many opportunities, I think, to capture that and keep it here. And as a part of that, they are standing up their own angel network. I think this is a great feeder into that. We are working with them to kind of build that roadmap. But we need more companies.
What about a company like a
angels.
chip company? Like we're investing in that App Orchid company.
Yes.
Is that deep tech? Or
they're
is that
software.
fringe?
I think they're mostly software based.
Okay, so that wouldn't be considered deep
it's
tech.
Typically like more the think product, like science, technology, engineering kind of products. Yeah, that are more disruptive innovations. New IP, less incremental innovation, more disruptive. Yeah.
Okay, interesting.
Innovation.
So you aren't full yet on the.
We need both.
Yeah, you need both sides of the equation.
Yep.
You need
We'll take
investors
both.
and you need companies.
Yep.
Okay. So maybe we can help get the word out a little
would
bit,
love
put
that.
this in the newsletter and so on.
Yeah.
Okay. But you've got more money to potentially more. you got this non-dilutive funding to deploy alongside. Is that alongside the angel money?
Correct. Yeah. So the program launched through this Accelerate California hub. So again, we're one of 13 hubs around the state, and so through the state funding, we've been able to allocate up to $500,000 in non-dilutive funding to companies, and so we've been using the AngelCon as a rallying point, and so we have an additional $300,000 that we're going to deploy. That's all non-dilutive to 6 finalists. So that'll be kind of the pool. So from an investor standpoint, it's leveraged dollars in the sense of one of those finalists will be getting, potentially $50,000 to $100,000 in non-dilutive capital, so extending their run rate and all of those elements.
Just a little better chance of success, I guess. Extra 50 or 100 grand.
Yeah, exactly. So that's kind of what the opportunity looks like. From a startup lens, obviously that's on the table. So not just purely the equity investment side, but the non-dilutive component to it. And so, we're currently looking to, capture both sides of the market. I think one of the things is, when we've done this investment thesis with our angels, again, most of them never would have put things around the deep tech. And so there's this kind of psychological barrier of like, do I know enough to invest in this space? And really this is that on-ramp to learn about it, right? We're going to be teaching them about angel investing, but also adding in additional elements about understanding regulated pathways and how you actually can do due diligence on deep technologies. And so again, the key is you don't have to be the expert on those things, but learn about that process and then also know who you can go to for those opportunities. And that's what we really want to build, is that network of support for angels that want to start to deploy capital in these technologies that not only have a high potential for return, but a high potential for making an impact in our world. I think it's a really great opportunity all around.
So where do they go to sign up? Is there like a website, or is there going to be a link in the show notes?
We'll give you a link in the show notes.
Okay, great. Yeah. So there's basically a link and you can sign up online, I suppose, versus not like a toll-free number or anything.
Yes,
yeah,
absolutely. Okay. Or just email me.
Email Monique.
Just call Cameron.
Call Cameron. Let me give you what's your cell phone number, Cameron?
It's probably on some public site. So.
That's funny.
And I will say that we're doing 2 this year. So this is the first of 2. We are running the normal AngelCon, whatever. That kicks off in June. That'll culminate in November. So this Deep Tech edition will run from now until May 7th is the showcase. And then we'll start recruiting for the second program, June through November.
Okay, so I'm gonna have to save up another $5,000 here if I get to participate, huh? Okay. So what did I not ask you that we want to make sure we cover, or any just kind of closing thoughts?
That's a good question.
Yeah, I mean, I think, for me is just continue to support the ecosystem. We can't, I remember just nobody builds an ecosystem alone, and that ultimately, if you're not able to invest, how might you support the program, making sure entrepreneurs are aware of it, or if you know someone that would meet the definition of an accredited investor, share the opportunity with them. Obviously, we can hit our social media channels, but word of mouth from person to person is really key. And as I've shared, entrepreneurship is vital to building our community through job creation. And then, how amazing would it be that the future of cancer therapeutics comes from our region, and that's what people point to. And so rallying around our starters is a key component.
And an accredited investor is somebody with $1 million of investable capital.
There's
or high income person.
Yeah, so there's a couple of thresholds. So one, it could be based on your annual income. So if you're a single filer, that's $200,000 a year that you've been able to do for the last 2 years. If you're a joint filer, that's $300,000 for the joint filers, and then $1 million in net worth outside of your residence. So primary residence.
Okay.
And you can find that on the SEC website. So that's where that derives from.
Monique, anything? You got something to drop the mic? Some closing comments?
Oh gosh, I don't have a drop the mic. I think just thank you for having us. Thank you for allowing us to get the word out. Thank you for participating. At the end of the day, I think Cameron nailed it. Nobody builds a truly great company or ecosystem alone. And continuing to share the importance of engaging. It is like, if not you, then who? And if not now, then when? I think we just really, in this region, to compete moving forward, we need to work together and we need to invest.
And the other thing I would just, I guess, add in closing, it's fun, right? So it's kind of fun. It doesn't matter if you know zero about angel investing or you know a lot. It's still fun to be around like-minded people.
Yeah.
And, the backyard advantage is all around showing love to your fellow entrepreneur, your fellow Sacramentan. So you mentioned this at the beginning, Monique, just the network of people that you're around. You want to be around people that make you a better person. And that's what AngelCon is all about.
Yeah,
You got it?
thank you.
I love it.
Thanks for watching today's show. My goal for every episode is that you find a takeaway, something tangible you can use in your business today. And if you have a comment about a favorite takeaway, feel free to put it in the box below. And if you have a topic that you'd like me to bring up on the show, don't forget to let me know. And also, don't forget to subscribe to our YouTube channel if you want to learn more about entrepreneurship. Because at Haney Biz, we are always by your side.